Hey everybody, Chris Remmes from Coldwell Banker in Boston. Welcome to the latest version of my video blog. I appreciate all the comments and the feedback that I get, and I know that you guys really like these and enjoy these and seem to be learning a lot from them. Today I want to talk about the mortgage commitment. The mortgage commitment is something that we don't talk about enough, I believe, in the real estate industry, both on the buy side and the sell side. It's very important to both people. For the buyer, it's your last chance to get out of the deal, and for the seller, it's the buyer's last chance to get out of the deal. So until that happens, things still could go sideways on the deal. So back to the buyers. If you're a buyer, as I always discuss, it's very important to probably sit down, to pick your real estate agent to sit down and to discuss the whole home buying process. You want to talk about searching for homes, picking out your mortgage broker, working with a mortgage broker, what's important to you. But you also want to discuss the mortgage, the offer to purchase process. And embedded within the offer to purchase process is the mortgage contingency date. The mortgage contingency date usually happens about 3 weeks after we sign the purchase and sale agreement, and that is your last opportunity as a buyer to back out of the deal and to protect you and get your deposit back. Once the appraisal happens, then the banks will be contacting you as the buyer. Once they have the appraisal in, they'll be asking you for all that paperwork that they asked you for before. They'll probably maybe have misplaced things. They'll find out that they need more things. You'll be churning and burning with all your paperwork. So that about 3 to 4 weeks after you sign the purchase and sale agreement, then you'll have the mortgage contingency in place, and the bank will give you the green light to go ahead. Very important milestone for you as the buyer. And then you'll close once you get the mortgage contingency taken care of. Then usually about 10 days to 2 weeks later, you'll end up closing. And if you're the seller, when you're negotiating the price, the sellers usually think about the price and they usually think about the closing date. But you want to look at the mortgage contingency date, because if it's not a cash buyer, they can still get out of the deal right up until that mortgage contingency date if the bank says that they don't qualify. So if you're moving and you have trucks coming and it's that time of the year when it's hard to schedule things, it can be very stressful. So if you're the seller, you're going to want as much time. You're going to want that mortgage contingency to expire as soon as possible. Something that you need to have a conversation with your listing agent about. So I hope this was helpful. It was a nice, quick, short little topic. Mortgage contingency dates, like I said, not something that we talk about enough, I feel like, with our buyers and sellers these days, particularly when you're newer in the industry. So if you have any other questions that you want to have answered, or any other topics you want to hear about, feel free to leave it in the comments below, or feel free to send me an email. And I always love hearing your feedback. Have a great day. Chris Remmes from Coldwell Banker.